Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having a fantastic day. We're taking another look here at Bitcoin, helping you understand the best practice and big picture for, well, ultimately, what's happening in the market today. So we're going to take a look at weekend behavior, traditional markets, Bitcoin dominance, the whole 9 yards there, kind of see roughly what's going on here and help us understand kind of what may occur next based on the recent data. So good news is, just to highlight quickly, we've broken above both descending trends, right? So we've got the previous descending trend from 69,000 all the way down to 21,000, or 17.6 of course, and then the most recent trend where we kind of capped out at 20,450 or 20,500 is a round number, and worked our way all the way down to about 18,000 range. Okay, so we've hit this little descending trend. We're tentatively broken above, but today hasn't closed yet, so we don't know, right? But that was an attempt nonetheless. So break above is very positive there. Okay, so good stuff here. And what's also good, just to kind of highlight this as well, just in case you're not currently part of my community, we did take some massive profits here from BNB, nice little 30% there, 66% from our Ethereum trade, and of course a previous Ethereum trade at 89%. So if you are not part of my community, highly recommend you consider joining, because there's some really awesome opportunities here, of course, as well as just how awesome my community members are doing. And a lot of them are using Bitget, and that's my favorite exchange of all time, just because, well, they offer leverage in the United States. It's a really awesome option. Same thing with the fact that they offer prize pools consistently, and we have one every month at least, whereas you can benefit from $10,000 of prize money. We've got 4 days left in this event, and what that is basically just, the top three winners will take profit and loss ratio. They take a nice little cool 3,000 there. Same thing with trading volume, and there's also massive volume too. If you hit anywhere over 4 million in volume, you're going to be put in a prize pool of the top four randomly selected for an extra $1,000 per person. So awesome stuff here with Bitget. Love their exchange, and I can highly recommend them. If you register in the link in the description below with my link, then you'll have the opportunity to be part of that at all times. So just keep that in mind. That's going to be an eligibility. You really need to have $250 or more in your trading account, and of course have registered with my link in the description below. If you didn't register with my link, feel free to message me direct. I can definitely still get you added on, but generally speaking, make sure you use that at all times. Okay. That being said, what's going on with Bitcoin here? Well, let's go ahead and take a look at standard stuff here first and foremost. So if we look at the kind of traditional markets, we can see that NASDAQ and S&P are, well, they're both kind of, I wouldn't say drawing dead, but pretty much close to open, if you will. S&P is up a little bit, but generally speaking, we're not seeing a lot of growth right there. And, if you kind of take that into consideration with how strong they had opened up in the markets yesterday, like NASDAQ, like E-mini futures, for example. See if we can find this open here. So yesterday when it opened, it got kind of crazy, and when it opened, it was yeah, there it is. It just jumped up, and then Bitcoin did the same thing as well. So if you saw a spike yesterday afternoon from Bitcoin, it's because traditional markets, futures had opened up on the weekends, and they spiked up a pretty decent amount. Now this may not seem like a lot. It's only 1.25%, but for 1.25% for a traditional market is more like a 5% movement for Bitcoin. Okay, so it's enough to notice. But anyway, just something to kind of factor in and understand that shifted things in a bullish direction here for Bitcoin, because the price shot up and got rejected inevitably off of resistance level right around the 19,700 range. Okay, so we'll take a look at that and much more, but generally speaking, that's the general concept of why we saw that increase from yesterday, and I think a lot of it came from political news, perhaps, of a handful of things, but there was one major catalyst there, of course. But regardless, that's where we're at there, and that's where the fundamentals kind of push us. If we take a look at more traditional technical analysis, you can see we keep jumping up and down above and below the 50-day set moving average. The key here is that we are trying to break above, and that's the important thing. We keep retesting, and that's helpful. Just because we're down a little bit here today doesn't mean we're going to drop like a rock. I think Bitcoin's held fairly well, all things considered. It's just the standard, profits are being taken on yesterday's gains. That's the bottom line here. It's a Monday. It's very standard for Sunday night behavior to get washed away when the market opens, as long as the market doesn't open green. If the market had opened just really, really strong here today, probably a different story. But that's kind of where we're at there in that sense. The RSI, we're still figuring it out. Today's candlestick hasn't closed yet, so we may actually close above. We will see here soon. When we look at the MACD as well, it's kind of ugly. So honestly, not much to really note there because we can kind of range bound between 19,000 and 19,600 for literally like 2 weeks. So it's just been an ugly price action for the last little while. But again, we're doing statistically better than traditional markets. And in fact, we're trading with the same amount of volume as NASDAQ in most cases. And that's interesting because that just shows that volatility has come down a lot from Bitcoin. Not to say, the intraday volatility isn't changed, because obviously you see, these very ugly candlesticks and candle wicks when it comes to CPI data, but generally speaking, it is something nonetheless. Last thing we want to take a look at would be the moving averages. I'm speculating we got rejected off the 50 again. Let's go ahead and see where we're at here. And big surprise, there's the 50-day moving average holding the price action in place. It's also aligned itself with the Fibonacci retracement level of 19,600. So if you were to have a profit target, I would highly recommend 19,550 or something just below that. And these are things I like to teach in my community and of course my trading academy, but it's important to make sure that your profit targets are always just below a key level resistance if it's moving up, or just above a key level support if it's moving down. Right? Generally speaking, the concept is the same, whereas the price will come up there, it'll reject at that price point, come back down, and if you get greedy and you put your price at, just say 19.6 instead of 19,565 or 585, you're not going to get filled because it won't wick up that far. Okay? Again, not to say it won't eventually hit, but generally speaking, you want to try to get in and get out, right? That's the whole concept of trading, is to kind of make it efficient, if you will. And that's just an efficiency tool that I like to use. All right, so let's take a look at the 4-hour. And we can see we're kind of above and below all the moving averages again. This is just kind of normal behavior for range-bound activity, so I'm not super sold on that. I do like that we're above this trend line here and tentatively working as a support. So hypothetically, the price action should stay above 50 and maintain itself for a closure today above 19,300. I personally am looking for a close above 19,300 today. That would still be bullish in my opinion, because we wouldn't have a bearish engulfing candle today. It would just be a traditional candle followed by a strong green day with a lot of profits that are being taken. If we take a look at this here, we can see that, of course, the moving averages starting to diverge. It's not quite diverging, but it is absolutely telling us that it wants to come down and it's losing that bullish momentum. Big surprise, right? I'm sure it's not a shocker to anyone. So that's kind of standard stuff there. Again, it's not foreshadowing a reversal. It's just telling us that, hey, it is coming down, and the last 24 hours have been slightly bearish, or 16 hours, however you look at it. TD sequential, let's see where we're at. Not a lot to be said here as well. Obviously, we see this previous 9 on TD sequential, price continued lower. As you can see, it doesn't always occur where the price bounces after you see a 9, but it is fairly likely that you will see a reversal when you see a 9 to follow. Okay. That being said, we're at like a 2 and we're getting a reset and we came up to a 4. So again, not a lot of strength and consistency here. There's no over-exhaustive state that we're seeing, and it's definitely just one of those things where the price action continues to jump up, get rejected by a key level resistance, 19,600, come back down to bounce off a support at 19,000, and continues on its merry way. This is just traditional trading 101, right? It's just completely range-bound. So that's all well and good, but generally speaking, we want to break through those resistance levels. It certainly tried recently. That was roughly a week ago, but we haven't been there again yet. Key takeaway here is that we did retest this level, even though we got rejected again. There's a strong chance we might see something along the lines of a cup and handle, right, where you see this come up like this, and it comes down and goes around. Now, that's actually not a bad drawing for left hand. So yeah, if you see that, generally speaking, this could be a potential reality here. Again, a closure above 19,300 today could signify a cup and handle potentially on the 4-hour. Again, a lot of this is potential and hypothetical. We've seen this before, where the price rejects out at a key level resistance, but I think at this point, if we can close above 19,300, we'll have a leg to stand on. We'll be making higher lows, and we'll still be doing pretty consistent. Okay. So that's what we're looking for here. Higher lows and higher highs. If this next high can break 19,600, hell, even 19,800, then we're going to be in extremely good shape. Okay? Because again, 19.6 to 19.8 is a very, very strong resistance channel. Okay? So we got to be mindful of that. That is going to be a path of resistance. All right, so let's take a look here at the 1-hour. Let's go ahead and focus on TD sequential while we're at it. Big surprise, we came up to a 9 last night, got rejected, and came back down. Okay, so again, you want to try to pay attention to how often you see a 9, because a lot of times when you see them, there is somewhat of a reversal that occurs. It's either reversal or consolidation in the same direction. Okay, so right now, if we're coming down, we're down to a 3. We got to reset at a 7. Really tells us that we could have another 7 hours of bearish momentum today. So today's remainder of the trading day could very well be summarized with that. Okay, that could very well be the case. So keep in mind, we might see continuation a little bit further, but once again, a closure of 19,300, in my opinion, would be a bullish sign because we'd still be making higher lows. Okay, so again, that'd be awesome if we could do that. But there is no doubt that tentatively right now we are making lower lows on the most immediate 24-hour time frame. Okay, lower lows and lower highs are being printed, so this does speculate that we could see further downside. But you got to keep in mind too, this large candle is all just getting bled out, right? And that's a very common occurrence in trading. Okay, when you have a long candle, that's why I urge caution with Terra Classic and a handful of other coins that go parabolic. People think it's going to go to the freaking moon, and it's not even accurate at all, because if it does, it's going to drop like a freaking rock. So this guy was actually disadvantageous in a sense because it was too much in too little of a time, right? Gave us that overexhaustion and that that breach outside the standard deviation. When we take a look at the volume weighted average price, you can see clear as day how far outside this guy came. Like, that was too much price action outside of that time frame. Okay, so again, you have too much volume in a short amount of time, it can lead to catastrophic situations, especially when the volume starts to die off. Either way, that's just some general stuff there. Let's do one last look here at the cloud and call it a day. So taking a look at the Ichimoku cloud, we can see the price action still maintaining above. It is wanting to break below though here soon, and the conversion line is already below the baseline, lagging span intersecting with the price action within the next 2 hours. So that tells me that a continuation to the downside is more likely than a bounce right now. Again, you don't take a trade based on only one indicator, but this indicator is awesome because it has basically 3 built into one, and we've got 2 out of the 3 indications telling us to close our long position. Not saying you necessarily have to open a short, because it could very well bounce. That's absolutely a possibility. But on the same accord here, once we break below that cloud, it'll be considered a resistance, and then 19,300 flips from support to resistance. And we don't want that. Obviously, it depends on which direction you're heading, but at this point, I would just wait for the closing of today's trading day first before you make a decision, and then kind of go from there. And again, try to exercise patience. I've had some members message me this weekend where they didn't get in on my Ethereum trade, for example, on Friday, because they got concerned it started to come down a little bit. They sold, and then it spiked up, and we got almost 100% return on investment on 2 different trades. So, again, my heart goes out to you. This is a very common thing in trading when you kind of get cold feet, so to speak. But sometimes it can be the best thing ever too, because getting out, had it continued lower, you might have gotten wrecked a lot further. So you got to recognize there's always 2 sides of the coin, but I would say that the foundation here is that patience is what we need to focus on as traders and make sure we're not over trading. Unless, of course, you're day trading or scalping, that's a different story. I have a large community of day traders and scalpers in my team, so to speak, and what they do is they have very consistent routines that they go through. They're always very structured. Okay, you got to have some kind of structure to be successful in this environment. And those are things I try to teach in my trading academy. Make sure you watch those videos over again, specifically chapter 7, where I discuss risk management. That's probably the biggest issue for most people. But generally speaking, it's important to be patient. I think that's what I'm trying to get at here. That being said, let's be patient. Let's wait for confirmation, because we don't have confirmation right now at this point. Okay, that's generally where we're at. So either way, that's essentially the big picture here. If you, once again, are not currently a community member, consider becoming one. Of course, I have a really awesome community where I send out trade signals. We have obviously a really awesome trading university to teach you all the foundational stuff. And on top of that, make sure you're using Bitget with the link in the description below if you want to benefit from that $10,000 prize pool monthly. It's a really awesome opportunity. So be sure to check that out in your own time. I hope you have a fantastic rest of your day. We'll look forward to seeing you on the next one. You take care now. Bye-bye.